Welcome to Compeer's Ag Edge, brought to you by Compeer Financial. In each episode, we break down complex agricultural economics, policy dynamics, and farm business topics into conversations that make sense for your operation. We're here to help you stay informed and confident about the trends and decisions affecting your agricultural business. I'm Compeer Financial Ag Economist Megan Roberts, and I am joined today by Ben Duncanson with our Legislative Affairs team. Ben, we have some news about the Farm Bill, which seems to be the thing we announce every month, maybe, that we have just a little bit more news. But let's start with the Senate draft of the Farm Bill. What can you share?
Yeah, thanks, Megan. It is a process, as everybody should know, and we are another step closer in that process. And that was, as Megan highlighted, on June 23rd, Chair Bozeman released his Senate draft text. He labeled it as a discussion draft, which is a little bit of a different approach than we initially thought he was going to take with the framework and then a little bit development. But the text of the bill has been released, so we do have a better understanding of what the Senate is thinking, at least on the Republican side. So we won't go into too much detail here, folks, today, but just wanted to give you a little bit of a feel of some differences between what was in the House bill and what didn't make it into the Senate bill, because there are some nuances here, not only on the policy side, but on the politics side, that give us a little bit of insight to how this may move forward. There was four main things that were a little bit of a contrast between the House and the Senate bill, and that was the Senate bill did not include E15, which, again, was not included in the House bill, but was included in a separate vote on the House floor. The House did combine the E15 bill and the Farm Bill provisions when they did send it over to the Senate. However, we won't get into too much jurisdiction issues here, but given that that is outside of the purview of the Agriculture Committee, that will probably not proceed as along with the Farm Bill text, but may be added on later on in the process in the Senate. Senate rules are a little bit different than the House rules, so that's something that we'll keep an eye on as it moves forward. Another thing that was not included in the Senate bill that had a lot of people were looking out for was the pesticide labeling language that was originally included in the House bill, but ended up not making it out of the Rules Committee. That ended up not being included in the Senate bill either, so we do not think that pesticide labeling and liability language will be included in the final version of the bill. There's always a chance of amendment, but given that there's some pretty severe political headwinds in the Senate against that, we do not think that will most likely be included, but we shall see. The last two were a little bit of a nuances as well. The Senate did not include a fix to the Prop 12 issue that has been a major issue facing the pork industry as well, as there's a little bit of a difference of approach when it comes to the Trade Promotion Authority programs at USDA, with the Senate being a little bit different in their approach, a little bit more proactive with how they want to see that program implemented, and a little bit of a different way in which they will disperse funding for that program as well. So those were the four main differences as we see them today. For us within the credit space in Compeer, we were happy to see that many of our priorities were once again included, including the Investing in Rural America Act, which will help us support rural communities throughout the country, and as well as some provisions that we've been fighting for to support beginning and young farmers as well, especially with our partners at the Farm Service Agency, and modernizing some of those loan programs as well. So all in all, we are delighted to see that draft released, and we continue to hope that this process will move forward.
So Ben, I'm going to attempt to summarize, just because that was a lot, which is always a risk to try to summarize a farm bill because it is a lot. But the main differences from what you just shared is going to be that we've got the lack of E15 in this version for year-round nationwide E15. We don't have the pesticide labeling. We don't have a Prop 12 fix, and then just some nuance with the trade language. Is that a good kind of top line summary?
Without getting too far in the weeds, that's a very
Without
good
being too
high-level
weedy.
summary. Yeah, that's the main differences out there. Granted, there's some different politics in the House and the Senate around all this as well. And I'll let some other talking heads be the talking heads, but there is a lot of talk out there about this bill maybe having a higher chance of making its way through the Senate than possibly the current draft of the House bill. But again, we'll see as this goes forward. And this brings me to the big elephant in the room question out there as well, and that's what can be done on the nutrition program. Senator Klobuchar, who's the ranking member of the Senate Ag Committee, has been open to further discussions about maybe some ways in which they can postpone some of the effects of changes to the SNAP program, mainly related to the state cost share that was included as part of the One Big Beautiful Bill. So that is something that they are discussing currently to see if there is a compromise that could be made between the Democrats and Republicans and hopefully be able to make it over that 60 vote threshold in the Senate that you need for floor consideration as well. So a little bit of some nuances out of the Senate. Again, for all things Title V, we are delighted to see many of those provisions that us within the lending community have fought for so hard. And we are delighted to see that there was continuances of a lot of great progress that both the House and the Senate have made over the last year or so. So this comes into the factor that we all have in the back of our heads. And as summer goes on, we get closer to all things August recess. And then shortly after August recess is those midterms. So before we go into some of the things that the House and Senate will be considering between now and the end of the year, just wanted to remind folks that our friends in the House and Senate are out this week, still on 4th of July recess, but they'll be back in session next week. And they have only 16 legislative days between now and August recess to continue to work on several items. I mention this because Chair Bozeman has indicated before the July 1st recess that he's hoping to get Ag Committee consideration of the bill, or a markup as they call it, happening before the August recess. So given there's a pretty short time window for him to get that done, that's something that we're all fairly closely watching as well. Megan, anything else I should highlight before I go into the long list of things that Congress needs to accomplish between now and the end of the year?
It is a really long list, and I was going to ask you about those dates. You know, they're not back until next week. For the Senate, it looks like that first week of August, they'll be recessing. And I know you and I were chit-chatting a bit before we got together for this podcast, and it is very likely, Ben, correct me if I'm wrong, that the House will not even be there as long as the Senate. So it is a very compressed amount of time, and they've got a lot to do, and not just a farm bill.
Yep. And to think a little bit past August recess here, folks, just a little bit of a reminder, between now and Election Day, there's roughly 40 legislative days. It seems like November is getting closer and closer as time goes on, but a reminder that they're out for most of October as well. So we'll see what can get done between now and the end of the year. Just some things that they have to get done that's on their homework list is things that must pass by the end of September are the Farm Bill or an extension thereof, as well as 27 appropriations, fiscal year 27 appropriations. We'll see if they are able to make some advancement on that before the midterms or whether they're going to have to rely on another CR to get them on the other side of the elections. Some other things that Congress was hoping to get done a little bit earlier on this summer that still linger would be FISA, which is a national security piece of legislation that allows for the national security services to monitor domestic and international communications, put it at a very high level, as well as the National Defense Authorization Act, which has to be passed every year before the end of the year as well. So those are some of the top ticket items, but there's some other things that are on Congress's mind as well as this presidential administration. One of the things you'll be hearing about over the next couple of weeks is talk, on the House side at least, of Reconciliation Bill 3.0. We're now on the third reconciliation bill the House has to play with. And again, that's a little bit of a different mechanism for them to pass legislation that avoids that 60 vote threshold in the Senate. So we will be hearing a little bit more about that. Some things that may be included, especially as the House starts working on that, are things like the Save America Act, which is a piece of voter registration and election security act that has been the number one priority for the Trump administration, as well as a budget supplemental that was requested by the Defense Department to pay for some of the cost of the Iran war that were originally not budgeted as part of their fiscal year budget. And then lastly, one of the things that was able to pass before Congress recessed for the 4th of July was a bipartisan housing bill that was able to make it through the House and the Senate. President Trump decided not to sign that piece of legislation into law and has not indicated whether he will veto it. So it'll have to go back to the House and Senate to either be reconsidered and try to override that veto, or whether he will just not sign it and let it go into law, which would happen at the tail end of this week. However, if he does decide to veto it, that may be another piece of legislation that Congress may want to pass before the end of the year as well. So that is a short summary. There are also several other things in contention out there before now and the end of the year, but it will be a big lift for our friends in the House and Senate. Again, they do have a little bit of a different view on all things Reconciliation Bill 3.0, as well as some general other provisions out there. So you will probably start to see some differences of opinion as we get closer to the end of the year between the two chambers. So it's something to keep an eye on as we consider all things Farm Bill. The big takeaway from this is it is leading to some busy floor calendars for both the House and Senate floors. So being able to provide the time that is necessary to get a Farm Bill passed will continue to be challenging, especially if Congress continues to not get their homework list done sooner rather than later. And as the more delays, the harder it will be to find the time between now and the end of the year. And we have a new Congress next year. So, Megan, what else am I missing?
Well, you covered a lot. I was going to try to summarize that again, but it's so much, it's almost hard to summarize. I think if I were to summarize it, it would be that certainly now that we have a Senate discussion draft of the Farm Bill out, we are another step closer to Farm Bill 2.0 becoming a reality in 2026. And we can also look at the number of days left on the congressional calendar and the fact that we have a midterm and the fact that we have all those other things you mentioned and say it might be really challenging, even with this extra step now done in the process. It might be really challenging to get to the finish line, but there's some hope. There's always hope.
Well, to sum it up a little bit more, the clock is ticking.
Yeah.
And I think that's really what's out there right now. And the one thing that we haven't mentioned as well is maybe a little bit of supplemental ad hoc assistance as part for the agricultural community as part of either the appropriation bill or the Farm Bill. Still some debate whether that is needed, what size that package will be, and what mechanism it will move with, whether it's appropriations or, like I said, the Farm Bill. But that's something we will keep an eye on, too, as summer heats up in a variety of ways.
Yeah, definitely have been some different mechanisms. I know there's been different numbers floated. 11.1 billion has maybe been the most recent number on that potential ad hoc. And when it comes to ad hoc governmental assistance, it's never a sure thing until it happens, and it hasn't gone through the process yet. But 11.1 billion primarily focused on row crops and specialty, and then also some assistance for disasters in Florida specifically had been in the latest round of proposals. But we've heard other things. We've heard 17 billion. We've heard some different mechanisms. So something both Ben and I and others are certainly keeping an eye on.
Yep, there's not a number to hang your hat on, folks. So
no, not yet.
Just stay tuned for more.
Mm-hmm. So some other news of recent has been some trade. You mentioned trade from the perspective of just those little nuances in the Farm Bill, but we've had some bigger trade news. I think, are we ready to talk USMCA, Ben?
Oh boy, that was one of the big things over my 4th of July weekend that I was paying attention to. Megan, why don't you give folks a little bit of a high-level summary of what the state of play is and what this actually means? Because I know there's a lot of confusion out there from folks.
Yeah, so last week, Wednesday, we're recording right now on July 7th. In a week ago, July 1st, we had the 6-year anniversary of the United States-Mexico-Canada Agreement, which is a trade accord across the 3 largest economies of North America. That has been in place since 2020. And on the 6th-year anniversary, we had the opportunity to renew that USMCA agreement for another 16 years. It was announced on Wednesday that instead of moving forward with that process, we would move to an annual review. So the United States-Mexico-Canada agreement is still in play. It didn't go anywhere on Wednesday. It's just that instead of the renewal, we move to review. And that will be a process that we'll have to work through between Canada, Mexico, the United States. And it is a shift of maybe some of that longer term certainty in exchange for shorter term negotiation and discussion power. So that's maybe another way that I'm framing this conversation, that, you do have the gain of maybe having more discussion, more of a review process more frequently, but oftentimes there is a trade-off, and that trade-off is there's less of that longer-term certainty. And the reason why USMCA agreement is such a significant talking point in the agricultural community is because we do a lot of trade with the countries of Mexico and Canada. So last year, our number 1 agricultural trade partner was Mexico. Our 2025 export total was $30.6 billion worth of agricultural goods. And I don't know about you, Ben, but it is hard for me to even picture $30.6 billion. So it's a lot.
Yep. And hey, Megan, can you just talk to folks about how that has been increasing over time?
Yeah, it has been increasing on a regular basis. So for Mexico, we have increased on a annual basis. Just last year was a little bit on the slower side. It was a 1% increase. But over the last 5 years, we've really seen an increase up roughly $5 billion over a 5-year time frame. So it is an important market, and it's a growing market. When it comes to Canada, also really large numbers. They're a number 2 overall trade partner. And in 2025, we traded $28.2 billion with Canada. We were down 4% year over year. And some of that was because we were working through some of the tariff challenges, or depending on how you look at it, maybe it was tariff opportunities, but we were certainly in a conversation with Canada over the last year. And so there were some movements with Canadian consumers to buy Canadian. That did shift a little bit of our agricultural trade with them, but on a whole, they have also been an economy that is a growing export market for our ag goods. If you look back over the last 5 years, they increased about $3 billion in annual trade. So important markets. And they also, in particular, Mexico, are trading agricultural goods that have a really big importance to the upper Midwest. So I'm going to say real quick here, their top 4 commodities for import from the U.S. And you might be thinking when I say them out loud, boy, we grow a lot of them. And it's because we do. Number 1, corn. Number 2, pork. Number 3, dairy. Number 4, soybeans. So those are the top 4 agricultural exports from the U.S. to Mexico. And it's pretty easy to say for upper Midwestern farmers, those are important commodities.
Yep. And just to point out, we're not the only ones alone in this in agriculture. There are several other industries that are looking to get some adjustments to their original agreement under USMCA. The auto industry is definitely has their eyes open on a lot of this as well. So as much as we like to stick in our little ag space, this is a big deal for a lot of U.S. businesses out there as well. And as this administration has trade in the front of their mind, we will continue to monitor this because as Megan pointed out, this is pretty important to us in agriculture, pretty important to us in the upper Midwest. And just full disclosure, Megan and I do raise some pigs, and there are quite a few pigs that make its way back and forth across the Canadian border as well. So supply chains between us, Canada, and Mexico are pretty well integrated as well. So something that I know.
I mean, it is an agreement that has had challenges. So I do want to acknowledge those. There's been some challenges, for instance, on the dairy side with Canada, some other areas where there's room for what many folks would consider improvement. But there's also some importance, certainly, to the combined three economies for this agreement. And to your point, Ben, about pork, 30% of pork is exported, give or take 15 to 20% of corn in any given year, give or take 15 to 20% of dairy in any year, and then a whopping 50% of soybeans. So that's across the whole globe of U.S. exports of those commodities, but very important. And there are quite a few that are going to our nearest neighbors.
Yep. And as long as we're talking about corn, soybeans, and all things export, let's talk a little bit about the production slide, next year's exports. So, Megan, we had a little bit of an update on that end. Do you want to give, in the interest of time, a little bit of a brief update on that end?
Yeah, I'll try to keep it brief because last week was a week of reports. So before we have the announcement about USMCA, we have to go one day further back in history to June 30th. And that is the day that we get our annual acreage report every year, last day of June. And then we also get a quarterly stocks update. And what we saw wasn't too surprising. At least that's how I'm pitching it. We saw that corn planted acreage is down 3% from 2025. So USDA is estimating corn planted area for all purposes at 95.3 million acres. But that is right on where they were with the prospective plantings report back in March. So there was some question, are we going to go higher or lower, more likely because of some of the higher input costs? But as we suspected, in many areas, those decisions were already made prior to March, prior to April. And so folks seemed to stick with what they planned to when it came to corn. And we came in right where we expected in March. And that was, again, reported at 95.3 million for both March and June. On the soybean side, we are up from last year at 85.4 million acres. And that was also a slight increase from the March prospective plantings report. So 85.4 million acres is not our highest number of soybean acres, but it is just a little bit higher than our numbers from 2025. All in all, pretty much considered a neutral acreage report. We did see a little bit more of some news on the wheat side. I know we do have some wheat producers in the Compeer area. It's not our top one or two crop, which corn and soybeans are, but there is wheat acres out there, and we're seeing some impact from the lower United States where they had drought in the winter wheat. And so that has changed the all wheat number, which hopefully would be a little bit beneficial for our spring wheat growers up here in the upper Midwest. On the stock side, I'll try to not get too deep on that, but we have 14% more corn stalks right now than we did a year ago, 5% more soybeans, 8% more wheat. And yet, that report was seen as the tiniest bit of a positive news maker for the market because, to paraphrase the interpretation, the market was prepared for the news to be even worse. And so the 14% more corn stalks in 2025, the market was prepared for it to be even bigger because we had a giant crop. And so this was seen as actually a little bit of some bullishness or positive news for the corn market, and they traded a little bit up on that. So that, I don't think I did a very good job of being quick, Ben, on reporting those, but that's the news on the acreage and corn stock side.
Well, given the volume of information, that was fairly concise. So
they are really long reports, so I did keep to the high level.
Yep. As long as we're two quick topics that we need to address here, Megan, our friends at the Fed have had a meeting since the last we spoke. Do you want to give folks a little bit of a highlight on that, and then I'll talk about some labor issues on my end?
Yeah. So we have had a Fed meeting since the last time this podcast came out. So the Fed met with their new chair, Kevin Warsh, and way back when as in January of 2026, it was anticipated that this meeting in June would be the start of a more moderate federal funds rate, and that in turn would likely result in market interest rates being lower. However, then we had higher inflation in March, in April, in May. When the June inflation numbers eventually come out, we suspect those will also be higher. And so when Kevin Warsh began as the Fed chair and the Federal Open Market Committee met in June, we already knew it was going to be next to impossible for them to go in a more moderate direction. And so for a while now, the market and economists like myself have been saying this is very unlikely to be a meeting where anything happens in terms of the Fed funds target range. And we were right. Nothing changed. So we are currently at a 3.5 to 3.75% Fed funds target range. When we're looking at market interest rates, things like both fixed and variable rates, and then also things like Treasury yields, which have a large correlation with market interest rates, those are not tracking in this more moderate direction right now because of the fact that we had this higher inflation rate. At the same time, though, there's some hope that inflation will calm down. We have had some movement towards more moderate oil prices and energy prices. At least on that side of the equation, it is hopeful that inflation will not stay at a 4.1% range that it is right now. And that did certainly impact some of the decisions that were made at this June meeting. And then at the follow-up press conference, it also influenced some of the ways that we saw Chair Warsh respond to questions. They were, as a whole, a committee that was maybe a bit surprisingly hawkish, meaning very, very wary of inflation and where it might go. And that was something that we just didn't know until we got to live through that first press conference and see how the new committee would respond to this hike in inflation.
Needless to say, we could fall down a massive rabbit hole of talking about the new chair's belief on forward guidance versus the past chair. But one of the things I think, and just to sum you up here a little bit, Megan, the Fed is definitely in a wait-and-see kind of holding pattern.
Wait and see.
To see where the numbers come in and make some judgments going forward.
Thank you for summarizing me after I attempted to summarize you. Thank you for making that short and sweet.
I try. One of the last things I just wanted to raise for folks as we're talking about all things productivity out there as well, one thing that happened on the House side, and this is something that we've been waiting for quite some time, which is that Chair Thompson did release an ag labor bill. There has been some committee work happening across the aisle to come up with a solution to some of the issues that are specific to ag labor and immigration. So we were happy to see that Mr. Thompson was able to release that language, and some of those recommendations would go a long way to helping to modernize the ag labor system and make it a little bit easier for farmers to access that foreign labor that they would need for their production. We'll see how that if it's able to make its way through Congress. But given that seems to be a perennial issue for a lot of us within the agriculture community, especially for our dairy farmer friends out there as well, just wanted to make folks know aware of that piece of legislation and something for them to keep an eye on as well. Megan, anything else we need to let the fine people know about before they can get back on with the rest of their day?
Well, I feel like we have talked about a lot. I don't know if it's all the most interesting things, but it's important. I thought that I could end with what I think are interesting facts about the 250th anniversary of America. Should we go there?
Oh, please do. Please do.
Okay. So I have attempted to make these ag specific, but last week we celebrated the 250th anniversary of America, and many of our founding fathers had ties to agriculture. So first fun fact, George Washington, in addition to being the first U.S. president, is also thought of as the father of the American mule. Did you know that, Ben?
Sadly, I did. Yes.
He did, yes. Okay. So George Washington pushed mule breeding at Mount Vernon because he thought mules were better suited than horses for farm works. And if you didn't know, which I feel like this audience is likely to know, but if you didn't, mules are the offspring of a mare, a female horse, and a jack, a male donkey. And they are not to be confused with hinnies, which are the offspring of a jenny, a female donkey, and a stallion, which is a male horse. So don't get your mules and hinnies. George Washington, all about the mules, less so about the hinnies. Okay, fun fact number 2. Former presidents Thomas Jefferson, this one's actually not so fun, but it relates to July 4th. Former President Thomas Jefferson, who was a farmer, and John Adams, who was the son of a farmer, both died on July 4th, 1826, which was exactly 50 years after the Declaration of Independence and exactly 200 years from this past Saturday.
Would you happen to know John Adams' last words?
I don't.
Jefferson lives. It was John Adams' last words after a little bit of a up and down relationship over the course of the career. So, And if I may add one fun fact for all us econ nerds out there, George Washington was actually the first president to conduct a census of agriculture in his first term in Congress.
I did know that.
Yep.
Yes. My last fun fact, and then we can wrap up. Of the 30,000 soldiers that served in the Continental Army, many were farmers. The Army also drew heavily from merchants and mechanics, so historians do not have a precise breakdown by occupation. But because farming was such a common occupation at the time, the Continental Army that fought for American freedom was heavily supplied by the agricultural community. What surprised me about that fun fact is that the Continental Army was only 30,000.
A little bit of a smaller population back in the 13 colonies than we have today.
So we have hit a lot. We have talked Senate Farm Bill. We have talked about the short number of days in the congressional season. We talked about USMCA, WASD. Well, actually, we didn't talk about the WASD because we focused on the Acreage report and on stocks report, but we are getting another WASD in just a few days. So a lot has been covered. Is there any final things to say, Ben?
I think that'll cover us for today. Just thanks everybody again for tuning in. And I hope you, for all those that made it to the end, I hope you enjoyed the short list of fun facts. We try to make these a little bit of entertaining as well.
That's the reward for sticking with us.
Yep. So I hope everybody has a great remainder of the summer, had a happy 4th of July, and happy birthday, America, 250.
On that note, we will end it there. Thank you for listening to Compeer's Ag Edge. You can follow us on Apple Podcasts, Spotify, or your favorite podcast app. For more agricultural finance insights and resources, visit compeer.com. That's COMPEER.com. Until next time.